With us seeing the rapid decline in interest rates recently, there's going to be a lot of problems that come along with that and a lot of opportunities. And one of them, the mortgage industry doesn't really talk about and they don't really want you to know. Today, I'm going to let you know about it and I'm going to share. When interest rates drop, from now in the current levels, around 8%, they went down to in the sixes at this point in time, which is December of 2023. We are all of a sudden getting a lot of people that think it may be a good time to buy a home. But here's what else we get. People wondering whether they should refinance or not. And this is what we're going to talk about today because this is a major, major pitfall or opportunity when interest rates drop. And how do you know when you should refinance and when you should not? So when interest rates drop, there's a dirty, dirty secret in the mortgage industry, and not everybody participates in it, but there is a dirty, dark secret that happens, and a lot of people get tangled up into it. And I want to explain to you what happens. So when interest rates do go down, people immediately think, I want to take advantage of it. I want to lower my rate. I want to save money monthly. And the mortgage companies and loan officers out there, especially the internet guys, they see this opportunity and they immediately pounce on it. You'll start getting the mailers in the mailbox. You'll start getting the phone calls, the text messages, the emails, and saying, now is a good time to refi. Even some of my local competitors will put out there, you have to refinance right now. Rates have gone down. But the tragedy is this, something called loan churning. And the mortgage industry doesn't really talk about this a lot. Loan churning, what this means is they get a client to refinance early and often. And when they refinance early, what they end up doing is they end up not giving the client the actual lowest rate they may have been able to get if they would have held out a little bit longer. So they may refinance people in January, February, and March of this upcoming year because rates have dropped by almost 2%. However, what if interest rates drop by 3% or 4% by midsummer or fall? Well, they'll be dialing, emailing, texting again and saying, you need to refinance again because you could save even more money. That's called loan churning. And the reason why it's negative is the fact that in most cases, every time you refinance, there is a cost associated with that, whether the lender will tell you or not. But if you refinance early and you roll that money back into the mortgage loan and then rates drop again, yeah, you may save some money on your monthly budget. But what the lending industry doesn't tell you lots of times is how much you're adding back to that mortgage loan, especially if you do it twice. So case in point, maybe your first refinance, you save $200. And the second refinance, you save another $200. That's worth it. It's $400. However, if you did it twice on a $500,000 loan, on average, you're going to roll $10,000 to $20,000 back into that loan every time you refinance. So would it make sense for you to refinance and put $20,000 back into your loan to save $400? Not necessarily. You would have been better off waiting through a mortgage advisor or consultant like myself and said, hey, when is the optimal time to refinance? And in most cases right now, what I'm telling my clients is I think you should hold out a little bit more. You can do whatever you want, but I think you should wait until summertime or early spring to consider refinancing. It's too early. I think rates will go down a little bit more. So this is called loan churning. And the reason why it's bad is because you're overpaying to get the same savings. Get with a mortgage consultant, get with somebody that you trust. I recommend not just dialing a number or going online. You should have a real person, a real experienced professional that can look at it and give you a completely subjective and objective view all around for you and your family in the particular point in time that you are realizing that you may take advantage of refinancing. So if you have questions around this, there are calculators and there's ways to get this information. But I think the best thing you could do is probably get on my email newsletter list and subscribe to my socials here below this video. I have a weekly email distribution that goes out. It's very informative. It's short, it's sweet and quick. But every Friday morning, you could get an email that will notify you exactly what interest rates are. And actually down at the bottom, it gives a snapshot of what rates are doing and where they're trending. So if this was helpful, please like, share, comment below. Let me know what your thoughts are. If I said something that didn't make sense, you need clarification, or if you disagree with something, please give me some feedback below in the comments. And I look forward to making 2024 the most rewarding and productive it can be for all of us out there in the real estate, mortgage industry, and as a consumer, building wealth and paying off debt using real estate to do so.